Hi everybody, this is Lee. We're going to go over some monthly support and resistance for August of 2023. The charts in this presentation come from the Trade Navigator software that Gettess is nice enough to allow me to display to you. And I must tell you, I'm recording this as after the close on August 2nd, which is drastically different than how the markets looked after the close of August 1st. But honestly, it doesn't really change much from our analysis, so here we go. This is a monthly chart of the SPY. That's the ETF that tracks the S&P 500. I use it as a proxy for the overall market, even though it really isn't. The NASDAQ, the Dow, and the other, they all kind of trade by themselves. But you pretty much don't get a major move in the US stock market in general until they all agree. And what we have here, as you can see on this monthly chart, is a rather strong market. They've gone up nicely, taken out previous swing highs. The previous month just barely went from my upper moving average here, and last month didn't even get down to it. These two red lines, by the way, are 3-period moving averages. This is a 3-period moving average of the highs. This is a 3-period moving average of the lows, and they've been displaced forward 1 bar. And that's what I use as kind of a little roadmap proxy for how the market is behaving. What we would ordinarily do is we would look at the upper band at 442, I can say that, 442, and the lower band is 419. And we basically say 442 is resistance and 419 is support. However, 442 is clearly not resistance because we're already above it, well above it at that. And so there's even a chance it could be used as support. But it sure looks like they're wanting to make a try at this all-time high back here, right? And this little swing high back here is the next chart resistance that they're getting near to and seeming to have a little problem with. The thing is, this really looks very positive, and so does the weekly chart for that matter. If you look at a daily chart, it offers quite a different picture. Now, even before this big down bar here on Wednesday, they were showing some signs of a little trouble. They're struggling at the highs. We've got a big outside bar down coming off of the highs here, and then a bunch of sideways. So it looks like a little distribution, and it looks like they ought to come down a little bit. How far is the difficult question, but on this daily chart, you can see that they could drop all the way back down into this gap here. Gaps on bar charts tend to get filled in my experience. So you kind of expect them to come down and find support somewhere in this gap. Well, that happens to coincide with this swing high back here and this swing high back here. This area, by the way, is roughly between 439 and 445. As of a day ago, that looked a long ways away. Doesn't look nearly as far away today, does it? But that is still where they could drop to. No guarantee that that is support, but there's certainly reason to believe that it could be. And by the way, when we were looking at the monthly chart, we mentioned that this upper band here is 442. Well, that puts it right smack dab in the middle of that gap. So many reasons to believe that that could be where they're going. And believe me, there's no guarantee that it'll hold if they get there. And there's no guarantee that they have to go down there. I mean, you can see last month they stayed well above the upper band and kept going. The problem with trading, a combination of trading and analysis and why they're so different. From an analytical standpoint, it sure looks like they could hold this 442 as support and go up from there. If they drop all the way down to 419, which is this lower band, that wouldn't look bad at all. I mean, from an analytical standpoint, this would still be a rather strong looking market, and I continue to believe that. I think the market as a whole looks pretty good. However, if you bought up in here, that doesn't look good dropping that far, right? Trading and analysis are not the same thing, and that's not good for a trader to drop that far. Analytically, though, gosh, they could go down to 419 and things would still look pretty healthy. I think we got to take a close look at this 442 area, and again, that gap on the daily chart between 439 and 445. If they get down there, I kind of believe any signs of support coming in are probably worth buying. You ought to get at least a bounce, even if they don't just resume right back into the uptrend. So that's how we're looking at things this month. I hope you all have a good month trading. And who knows, maybe I'll be back to tell you what I think for September for FFR. Thanks, guys.